Every map you've ever seen hides a truth that feels almost impossible. Every modern nation, big or small, rich or poor, owes money. Trillions, stacked on top of trillions, locked inside ledgers nobody outside a small circle ever gets to see. Yet here's the question that cracks the illusion. If everyone owes, who exactly is collecting? Today we pull back the curtain on a financial world built not on gold, not on productivity, but on promises that can outlive governments. This isn't a story about numbers, it's a story about power, silent, invisible, and older than the institutions that claim to control it. Before this episode ends, you'll never look at national debt the same way again. To understand the creditor behind the world's tab, we must travel back to a time before spreadsheets and trading terminals, back when kings borrowed gold from merchants just to raise armies. Debt was not bureaucratic paperwork, it was a declaration of survival. A king who failed to repay didn't face a credit downgrade, he faced rebellion, exile, or assassination. Over time, these private lenders grew powerful enough to influence wars, borders, and successions. They learned an immortal truth. Governments come and go, but debt can live forever. And that durability made it the most valuable weapon in statecraft. Today's system looks modern, but at its core, it's the same ancient engine, only the actors have changed. Here's the twist most people never see. Governments don't borrow from a single, mysterious billionaire in a dark room. The real creditor is a shifting, layered hierarchy of institutions, each one feeding on the guarantees of the one below it. It starts with domestic banks, pension funds, insurance giants, entities that quietly stash government bonds as their safest treasure. But those institutions have creditors of their own, and above them sits a global ecosystem, so vast, so interconnected, that a default in one nation can shake markets oceans away. This is where the story becomes dangerous, because the creditor is not a person, it's a system. Picture a nation issuing bonds, promising repayment decades into the future. Who buys them first? Often it's the country's own citizens, through their pension plans, retirement accounts, and savings vehicles. Without knowing it, people become the lenders to their own government. The state borrows, spends, and stabilizes itself using the public's future wealth. This is why no major government dares to declare bankruptcy. The fallout would hit the very people who depend on the system to survive. But while domestic institutions are the front line, they aren't the true apex of this pyramid. They too borrow, invest, speculate, and hedge, passing the real burden upward. Step one layer above pensions and banks and you'll meet the giants: sovereign wealth funds, asset managers, multinational banks, and foreign governments. These players don't lend out of patriotism. They lend because government bonds are the safest collateral in the world. A trillion-dollar fund might diversify into dozens of nations' debts, turning geopolitics into a portfolio. Here, a nation's stability becomes a commodity. A peaceful country earns cheap debt. An unstable one pays a premium. These silent judgments shape elections, budgets, even foreign policy. But even these financial titans bow to an even more shadowed force, one that can create money from nothing. Now we reach the institution that changes everything: the modern central bank. People imagine central banks as guardians of currency. What they don't realize is that these institutions can conjure money simply by deciding it should exist. When a government borrows and markets hesitate, the central bank steps in, buys the debt, and stabilizes the system. But here's the twist: the central bank doesn't spend taxpayers' money. It literally creates new currency to absorb the risk. This isn't magic, it's policy. And it turns the central bank into both the lender and the buyer of last resort. If the world were a casino, central banks would be the house, and the house never loses. But central banks don't operate alone. Their power depends on trust. Trust that their currency will hold value, trust that their government won't collapse, trust that their bonds remain desirable. Lose that trust, and the entire architecture begins to shake. This is why nations fight wars over resources, negotiate trade deals, and seek geopolitical alliances. Stability is financial oxygen. If investors doubt a government's strength, its debt becomes expensive. If they lose faith entirely, its currency can implode overnight. In this sense, the creditor is not merely an institution. It's the collective belief of markets, voters, and foreign powers. Consider Japan, a nation with one of the highest debt-to-GDP ratios on Earth, yet its economy still stands. Why? Because most of its debt is held domestically. Citizens and institutions trust their own government more than foreign creditors ever could. Contrast that with nations like Argentina or Lebanon, where loss of trust triggered spirals of debt and inflation. The creditor's identity changes not with borders, but with belief. Investors don't ask whether a nation is rich. They ask whether it can convince the world that it will honor its promises. When faith holds, debt becomes a tool. When faith vanishes, it becomes a weapon. So who's the creditor now? It's not a monarch, not a cartel, not a single billionaire pulling strings. It's a hierarchy. Citizens, corporations, institutions, foreign governments, asset managers, and central banks, all bound by a system that rewards debt as long as growth continues. Debt has become the lifeblood of modern economics. Without it, nations cannot fund healthcare, infrastructure, defense, or innovation. And so the world continues borrowing, rolling old debts into new ones, creating the illusion of stability while the numbers climb beyond comprehension. But the most shocking layer is still ahead. What if I told you that even the central banks have creditors? Behind the world's most powerful financial institutions stands a deeper force, the global demand for safe assets. Investors, institutions, and nations collectively force governments to issue debt because they desperately need a reliable place to store wealth. In other words, the creditor of governments is, paradoxically, the system itself. A system hungry for stability, hungry for collateral, hungry for promises backed by entire nations. This demand is so immense that the world would collapse if governments stopped borrowing. This is why US debt behaves differently than anyone else's. The dollar isn't just a currency, it's the backbone of global trade. When countries buy oil, settle imports, or secure reserves, they use dollars. That global dependence creates an insatiable appetite for US debt. Foreign nations buy US bonds not because America is flawless, but because they need the dollar system to function. The US can borrow more cheaply than anyone else because the world itself subsidizes its stability. In this sense, the creditor of America is the planet, and America, knowingly or not, rents its power to the world. China also plays a dual role, both creditor and debtor. It lends money to the US through bond purchases, yet owes massive internal debts to its own banks, local governments, and shadow lenders. This strange balance of borrowing and lending is not a weakness, it's how modern nations operate. Debt webs nations together, binding rivals into interdependence. China holds US debt, the US buys Chinese goods. Each becomes the other's stability mechanism. The creditor is not one side, but the loop that connects them. Break that loop, and both powers would feel the earthquake. Now imagine a world where all major nations run deficits, all issue bonds, and all rely on constant borrowing to fuel their budgets. That's not a hypothetical scenario, it's reality. Debt is not a flaw, it's the engine. This engine fuels social programs, military spending, technological innovation, and even global peace. The creditor is every person, company, and institution that demands a stable future. In an ironic twist, we, millions of ordinary people saving for retirement, are the ones financing the governments we criticize. They bankroll their promises,
their failures, and their ambitions. But there's a shadow side. When debt grows too large, governments face difficult choices: raise taxes, cut spending, inflate the currency, or borrow even more. Inflation is often the quietest solution. Instead of defaulting, governments allow the value of their currency to slip. People feel poorer, debts feel lighter. It's a silent tax on everyone holding cash. This is why inflation tends to follow periods of heavy borrowing. It's not always mismanagement, it's the system defending itself. In this sense, inflation becomes the unintended creditor, absorbing the cost of political decisions.
So the real mystery isn't who's the creditor, but who pays in the end. The answer is almost poetic. The creditor is those who believe, and the payer is those who live long enough to feel the consequences. Taxpayers, savers, and consumers ultimately carry the burden of national debt through higher prices, slower growth, or reduced services. But that's only half the story, because while debt burdens the present, it also builds the future. Roads, schools, armies, innovations, all funded by promises written decades before. Let's return to the hierarchy. Citizens at the bottom, central banks in the middle, global markets at the top. This pyramid only stands as long as trust flows upward and stability flows downward. When governments deliver stability, the system strengthens. When they fail, markets punish them instantly. A bond sold at a higher interest rate is not just a number, it's a verdict on governance. Behind every debt auction lies a psychological battle between confidence and fear. Each investor is asking a simple question: will this nation exist, prosper, and honor its promises decades from now? History is full of moments when that confidence shattered. Ancient states collapsed under unpaid war debts. European empires cracked after overextending in colonial adventures. Even mighty superpowers have flirted with default. But here's the strange truth. Civilizations fall, but debt survives. A new government may rise, reject old rulers, even erase borders, but the financial obligations often remain. Creditors negotiate, restructure, or force concessions. Debt becomes a ghost, haunting nations long after the people who created it disappear. This persistence makes debt one of the most powerful forces in human history. In our modern era, defaults still happen, but they rarely destroy nations. Instead, they reset relationships. Argentina restructures, Greece negotiates, Lebanon restarts. The creditors shift, the terms change, the cycle continues. Because the world has accepted a fundamental truth: debt is unavoidable. It's the language through which nations communicate ambition. It powers economies, stabilizes currencies, and protects global systems. As long as growth exists, borrowing will follow. And as long as borrowing exists, someone, somewhere, will be the creditor. So who is that creditor today? It's you. It's your parents' pension fund. It's the insurance company protecting your home. It's the bank holding your savings. It's the U.S. Federal Reserve. It's the Japanese pension giant. It's the Saudi sovereign fund. It's the European Central Bank. It's the Chinese government. It's hedge funds in New York, trading floors in London, and digital platforms in Singapore. The world's creditor is not a villain hiding in shadows. It's the vast, interconnected network of individuals and institutions who need predictable futures and trust governments to provide them. So the next time you hear that every country is in debt, don't imagine a lost world collapsing under numbers. Instead, imagine a global structure held together by promises. Promises that define nations, shape wars, build societies, and finance dreams. Debt is not the enemy. It is the architecture of the modern era. And the creditor is not an outsider. It is all of us, participating in a system built on confidence, risk, ambition, and hope. In the end, debt is simply a mirror reflecting humanity's desire to live better tomorrow than we did today. And as long as that desire exists, the world will keep borrowing, and someone will keep getting paid. You've just watched the chapter in the hidden story of global finance. If you found value in this investigation, take a moment to support this channel. It helps more than you think. Hit the like button so this message reaches more curious minds. Subscribe if you want deeper, sharper, and unapologetically honest finance history every week. And share this video with someone who still wonders how the world economy really works. This is History of Finance Decoded, revealing the patterns behind money, power, and global finance.